Thank you everyone for joining today's Share Cafe ASX Hidden Gems webinar, which I should point out is a direct result of the hard work of the team who look deep into the ASX to find genuine hidden gems. In addition to scouring the ASX looking for hidden gems, from time to time, the Share Cafe team also seek out market experts to provide you with their own unique insights into what is going on in the market, the various sectors or themes to follow, and what could be coming next. Excited to say we have a genuine market superstar giving a keynote today. Martin Crabb, Chief Investment Officer of one of Australia's leading wealth advisory firms, Shaw & Partners. In addition to our keynote today, we will also hear from three great companies: Trigg Mining, ASX code TMG, Next Science, ASX code NXS, and Recharge Metals, ASX code REC. Each company will give a 10-minute presentation followed by 5 minutes of Q&A. Remember, we want you to shoot through questions. This is a highly interactive webinar and we want you to be part of it. If you'd like to ask a question, please send through those questions using the Q&A form at the bottom of the screen, and I'll put it to the executives and the presenters on your behalf. So right, let's get started. I would like to welcome Martin Crabb, CIO of Shaw & Partners, who will now provide his insights into the market. Martin, over to you.
Thank you, David, and thanks for the opportunity to talk to everyone today. Pretty tricky times at the moment. I'm going to speak for a little bit under 10 minutes, and then I'll pass to some of the very interesting companies that David and the team have organised you to hear from today. So I'd like to start with a general advice disclaimer on page 2 of the presentation, which is just basically saying this is general advice, it's not personal advice. If I end up saying something and you do it and it doesn't work out well, and not so much you're on your own, but we are not providing personal advice, just general advice today. So I'll try and get things as right as I can, but I can't be held accountable to it. So if I just go to the next slide, which is really putting the markets in context. I'm a bit of a Simpsons fan. There's a character in The Simpsons known as Comic Book Guy, and he calls things the worst XXX ever. This is the worst year ever for investment markets. And this is data back to 1928 from the Stern Business School at New York University. And it's the worst year combined for both equities and bond markets. So we've got the MSCI World Index on one axis, the annual return, and we've got the annual return from the bond market, which is characterized by the Bloomberg Barclays Global Aggregate. And this is the worst year. When you have a big meltdown in the bond market like you've had this year, where it's fallen 20%, equity markets generally do quite well because it means that the growth is strong. The reason interest rates are going up is because growth is strong. But this year it's been horrible. So I'm pretty my narrative you're going to hear in the next 5 or so minutes is not a particularly positive one, but just put it into context that the market's already fallen a long way. The Aussie market not so much, but global markets are down in some cases 20 and 30%. So just going to the next chart, there is mounting macro misery. I've borrowed that from PIMCO, the global fund manager. So just this idea of mounting macro misery. So a recession more often than not, and sticky inflation, tighter for longer interest rates, and cracks starting to appear. So just going to the next chart, was just looking at the misery index. So if you add the unemployment rate and the inflation rate together, it's what economists know as the misery index. And it has peaked in the 1970s and has been going down. So misery's been going down. We're becoming happier and happier. We've all got a job. There's no inflation. And that's just started to turn around. So this is looking at the US, UK, Canada, Europe, and Japan. And around the world, it's a global issue that inflation is causing misery in lots and lots of countries. So just going to the next chart, if I can. So the probability of recession is quite high now. So it's pretty much a certainty that the US will be in recession, according to the Conference Board. And I'll show you some forecasts of what growth looks like for next year on the next chart, if you'd like to click over to that. We'll just stay on this one. So the reason we're going to have a recession is that there's 3 wars going on. One is the Russia-Ukraine war. The second one is the central banks fighting against inflation. And the third is the lockdowns in China, which Xi Jinping kind of confirmed on the weekend that the Chinese government will continue to lock down their economy because their health system can't stand a breakout. And so we're going to have these rolling lockdowns, which are just going to stop world growth. And if you're not bearish enough there, Jamie Dimon, the CEO of JP Morgan, said at the IMF, you haven't panicked yet, you were going to. And the chief economist of the IMF said the worst is yet to come. So people are becoming quite bearish on the outlook for the economy. We are going to have a recession next year. So global growth estimates on the next page, just showing how much analysts have revised, or economists actually have revised their estimates for GDP growth for next year. So the UK is going to be in recession. It looks like all the other major economies, their growth is being revised down quite dramatically. It's only really China at +5, Australia at +2, maybe Japan at +1.5. Most other countries are expected to go into recession next year. So we are going to have a synchronized global slowdown next year. So just going forward to the next chart, unemployment will be expected to rise. So with inflation picking up, central banks are going to hike up rates, and that's going to cause unemployment. So it's currently estimated to be 3.7% by the end of this year in the US, rising to 4.3% next year, then 4.9% in 24, before coming back down again in 2025. So in unemployment going up a fair way to combat the inflation. If we just look at inflation as the next issue, the next chart, inflation is sticky. So inflation causes more inflation. It's got what's called serially correlated, serially autocorrelated. So when you get some inflation in the system, it's very hard to get out. If anyone's listening to this call or watching this webinar that lived through the 1970s, they'll just remember wages go up, prices go up, wages go up, prices go up. And that's what we're facing at the moment. And central banks don't want that to happen. So they're going to be aggressive in terms of hiking rates. So just go to the next chart, just showing the expectations for cash futures. This is as of yesterday morning. And you can see that cash rates in the US are expected to peak somewhere close to 5% and somewhere around 4.25% in Australia. You'll also notice a differential in the interest rates. So US interest rates will be significantly higher than Aussie interest rates in the early part of next year, particularly as the Fed's going to go 75 next week and the RBA is probably going to go 25. That'll put more pressure on the Aussie dollar because you can get a higher yield on US dollars than Aussie dollars. So tighter for longer monetary policy. And the RBA is not expected to cut rates until kind of 2025. So we're going to have high interest rates and they're going to stay high for a while. So that's not particularly good for equities. So just going to the next chart, which is some cracks are starting to appear. This is a bit of a busy chart, but basically the UK bond market started to get into trouble because there's a lot of pension funds who have long dated liabilities and they were finding trouble getting out of that market. And the Bank of England had to step in. If I go to the next chart, just looking at the fixed rate mortgage rate market in the US. So it's now 7.2% to borrow money to buy a house in America on a 30-year fixed rate loan, which is what most Americans do. That's a very, very high spread. You can see it's higher than it was pre-GFC, higher than before the tech wreck. So that's a warning sign itself. It's very, very hard to get money and it's very, very expensive to get money. So funding rates are going up and that's another condition of stress, if you like. And then sort of finally, okay, what do we do about all this? So if we go to the next chart, please. We'll just skip over that. That's more central banks stepping in. So we're favouring defensive over growth asset. We're adding duration to fixed income portfolios. We're remaining unhedged. We think the currency could go lower. And we're building resilient equity portfolios. And those equity portfolios might include some small and micro cap companies that are not tied to the economy. I think the stories you're hearing today, the companies will have their own growth strategies, which won't necessarily be tied to the market. So you can have some of the companies that are talking today in your portfolio, despite the fact they're not particularly bullish on the market. So just finally, just sort of our positioning in our portfolios, the final chart is just looking, we are overweight energy. We think it makes sense to own some oil and we're underweight the banking sector. So I probably used up my time now, David. Great to be on this call again and I look forward to talking to you again later.
Thanks, Martin. As always, some fantastic insights and gives a really good flavour to what the market is doing, what Shaw and Partners' views are, and where you think things could go. Obviously, not giving advice, just giving your own personal insights and some insights, as I said, into where things have come from, where they're going. And we always enjoy having you on. So, Martin, thanks for your time. Enjoy the weekend. We look forward to getting you back on again soon.
Thanks, David.
Well, thanks, Martin, for those valuable insights. Now, over to our hidden gems. As I said, these are 3 great companies we think are worth keeping an eye on. At the very least, put them on your watch list and watch them as the story evolves. Firstly, I'd like to welcome Keren Paterson, Managing Director from Trigg Mining, ASX code TMG, which is exploring for the essential potassium mineral fertiliser sulphate of potash or potassium sulphate, which provides necessary nutrients for agricultural production and human nutrition. Looks like we have a slight issue here. Sorry, my order's a little bit out, so sorry about that, Keren. You will be up next. I am actually welcoming Judith Mitchell from Next Science, ASX code NXS. Next Science uses innovation and cutting-edge technology to apply material science principles to address and ultimately resolve one of the leading causes of antimicrobial resistance, bacterial biofilms. Judith, over to you.
Okay, so sorry about that. Too many people pressing the buttons. Next Science, as David mentioned, is a biotech. And we are a biotech with a platform that addresses something very technical, but what it really helps is people with chronic wounds. And we can also prevent something called surgical site infection, which means the doctor operated, he did really well or she did really well, but you went home with a bug and suddenly life isn't as you want it. So these are both major management issues for healthcare today, and they cause patient misery and they cause healthcare to really badly run over their budgets. Currently, we're growing quite quickly at 57%. We today have 6 products in market, predominantly in the US. These products are sold through ourselves and also distribution partners. Some you might recognize, Zimmer Biomet, the leader in hip and knee replacement globally. And just recently, Terry White Pharmacy has taken on board our chronic wound product through their pharmacy network in Australia. We also recently announced the launch of a completely new business model to take part in the United States wound care market. It's called a DME, or durable medical equipment market. It is a game changer for us, so I'll give you some more detail about that shortly. Can we move to slide 3, please? So yeah, more disclaimers that nobody wants to read. So as we mentioned, quite strong growth, 43% in the quarter, 57% year to date. Current year to date revenue sitting at about $8.2 million. A big strategic development, accreditation as a DME supplier. So this means we've been audited 3 times, in fact, by Medicare and accreditation agencies, such that we can have a business that takes prescriptions from doctors and sells surgical dressings directly to patients. These dressings involve collagen. This reimburses really quite robustly at between $600 and $1,100 per 30-day supply, and a script is normally written for 30 days of supply. So I'm going to give you a little bit more detail in a minute as we move through the presentation. So the other things we did in the quarter, Zimmer Biomet started their launch. This is their second product of ours. They've taken our prophylactic lavage into the market since July. We got market approval in Canada, which was very nice after 18 months of arguing with the Canadian government that we were a medical device, not another form of cannabis, really. And we shipped our first shipments to Oriderm, who are the Blastex distributor in Australia, carrying both the product into the hospital market and then going through the chemist network. And it is now online with Terry White and in some stores. And we had our first shipment into our Australian distributor and our Surgex shipment into our New Zealand distributor. So really building out that footprint to try and get this technology everywhere, because it brings advantage to everybody. We also pulled through a fair amount of research, and I'm going to talk about that in a minute as well. Can we go to the next slide, please? So as we said, reasonably strong sales growth. The growth in the third quarter was all around Back to Shore, which is a surgical lavage sold by Zimmer Biomet globally, Experience, which is now sold in Australia and New Zealand, as well as the US. But in the US, we have partners as well as ourselves in the market, being Zimmer Biomet and Telebio. Blastex in the US and into Australia, and now into New Zealand as well. and Surgex, which is currently sold exclusively in the US by us and in New Zealand by NextMed. But the majority of the sales for the quarter were in the US market, which has some advantage. So any number I'm giving you is actually in US dollars. So with the current state of the dollar, I guess that's getting a pretty big lift. Next slide, please. So the purpose of this slide was really to show you the advantage of us opening our durable medical equipment company, or our DME. So as Blastex was in the wound care market, this is unquestionably a miracle in a tube. People love this product, but this is not a market or a product that is reimbursed because it's completely unusual. There is nothing else like it in the market. There's no category. People struggle to understand it because it does take down the biofilm, it does promote healing, and those things have never happened before. So the problem with being a game changer is you're kind of out at front on your own. This gave us quite a limited market for a while. Now moving into collagen, and we will be moving into combining Blastex and collagen, suddenly we're in 10 times the market opportunity, and we're at much better reimbursement per patient. And that reimbursement comes from Medicare. So I don't have people having to go and negotiate with doctors or hospitals or anybody else. All of that reimbursement is set in advance, and it's quite robust. It's been reviewed every other year with price increases. And the commentary we had around resilience in the current market, these are Medicare patients. So we're talking the over 65s, the people who are ill, the people with chronic injury or diabetes. That's a very resilient market in a downturn. Those patient numbers go up in a downturn. I shouldn't say I've been in medicine serving medical communities since the 70s, but that part is true. And the one thing we know is quite often medical technologies are really very resistant to the kind of market forces that impact other things. People will save their lives, and hospitals and doctors will save people's lives regardless of the economic conditions. And if the government are paying, as they are in this case, this becomes a strong business unit for us to support. The purple are our irrigation products, so currently limited in orthopedic surgery, and we'll be moving into the bigger market. We're working with the FDA to get our indications expanded. Next slide, please. So our DME and entering the reimbursed segment of the wound care market. So this is something called an A code, which is a little bit different if you invest in the tissues. They're Q codes, so you sell the Q code to the doctor. You sell the A code to Medicare, really. So the doctor writes a prescription, it comes to us, we check the insurance, we confirm everything's in place, we ship the product, and then we put in an insurance claim, and then we're paid 15 days later. Topical collagen products are standard of care in wound care. Of 8.2 million patients in wound care every year in the United States, plus 90% of them would be treated with collagen somewhere in their treatment cycle. The place of delivery is about 10,000 podiatry offices across the United States and about 1,800 commercial wound clinics. So big, broad market, big opportunity, products they're used to using. And what we're doing, and if we could move to the next slide, we are also giving people the opportunity to combine the collagen therapy with Blastex to actually improve their healing rates. So we're pulling through a very large study. We expect over the next 18 months to pull plus 10,000 patients through this study to show the impact of putting these two technologies together. Can we move through the next slide? So as I mentioned, Blastex is now available in Australia, and it is available online through Terry White, but it also going through the hospital network. Origin have an ethical sales force that calls across hospitals and wound clinics and dermatology. Next slide, please. So we launched Experience, our premium advanced irrigation product, in April of 21. Over the last 18 months, we have been building out Akasha research that not only shows that we do a really good job of preventing infection. So we have several doctors who will be getting up next week at the American Association of Hip and Knee Surgeons showing their case data for 300 and 400 cases of hips and knees with 0 infections. But along this road, and with the help of our key opinion leaders, we've learned other things about this technology. And so we will also be showing science that shows that using the experience will improve the interdigitation of the cement to the bone. So quite often a hip or a knee implant is cemented. And what we're able to do is actually make that cement do a better job holding on to the bone. So big advantage, so that we've doubled the strength required to pull the implant out. At the same time, we did a lot of research showing that we are one of the only irrigation systems, apart from saline, that does actually protect the bone building ingredients. So the other things that are used, which are really very effective, I mean, they're all diluted, but even diluted, they're that effective that they take away the bone building blocks. So we feel this is a major advantage for orthopedic surgeons. We're also in the middle of a study that we'll be talking about where we're looking at our impact on controlling the amount of inflammation the joint gets post-surgery, another major advantage for the doctor in helping their patients recover. Can I get the next slide, please? So these are our distributors who are actually dedicated to the task in Novus Surgical in Australia and NextMed in New Zealand. NextMed now have a coverage of 5 across the New Zealand various islands, and Australia has 20 agents. The product will be shown at this weekend's Australia-New Zealand Orthopaedic Association. Both are active in the market and have already made sales. And in fact, we have second orders from both of these distributors. Next slide, please. So this is our cash waterfall, record cash receipts in the previous quarter, up 85% on the prior year. We have $8 million in the bank. We have a reasonable balance sheet with no debt, but we will be continuing to push our sales and marketing expenses as we've done in Q3 and Q4. Remembering that we've just announced a brand new business unit. We're leaning into that business unit. We've expanded that sales force, so those expenses are starting to come through. Next slide, please. So this just talks about the fact that we did expand our marketing activity and have given people details. I think probably one of the key things to note here is over the next 5 weeks, we will present our research to over 5,000 surgeons in different Congress settings around the United States. We're also publishing significant research, and we've been really blessed to see the people that want to come and research with us. So as these research articles start to come out, you're going to see names like Mayo Clinic, Duke University, Cleveland Clinic, all wanting to see what advantages our products can bring to their patients. Can we move to the last slide, please? So why would Next Science be a good investment? Apart from the fact that we save lives and heal people, which is always nice, this is a company that is growing steadily and continuing to augment its product portfolio so that that growth just continues. We have 11 regulatory approvals around the world, and we protect our assets with 46 patents. Our DME accreditation truly moves us into the solid face-to-face wound care market, where we really have been playing with the academically elite and the VA with Blastex, because the rest of the market basically couldn't afford it. People could not put their hand in their pocket and pay for $150 ointment, where Medicare will actually help us get these products and sister products like it into the marketplace. So expansion of the DME is a priority for us, including expansion of the US direct sales team, which drives market penetration. This is a face-to-face business. We have new distributions, as we've mentioned, in Australia and New Zealand, and we're pushing through on multiple research publications for both wound care and infection control. So that's us, David.
Judith, thanks for that, and thanks for a great presentation. As you said, making a difference in people's lives is always a noble thing, but the fact that you've been able to successfully turn that into a very successful business is pleasing, not just for yourself and your team, but clearly your shareholders as well. We do have a number of questions that have come in. The first one for me, in terms of inflation, how do you manage the headwinds of inflation in your business?
So we have ensured when we're writing contracts with distribution partners who are buying from us, so we're the wholesaler, that we have adequate coverage and can make pricing increases when things like inflation happen. And as far as our suppliers go, we're also advanced our contracts. So we're buying some of our ingredients ourselves. We're buying bulk for what are the key contributors, which predominantly are things like benzalkonium chloride, such that we can get leverage that people buying for single products wouldn't get. So we're pretty comfortable that at the moment we're reasonably well protected. Most of our revenue is in the US and in US dollars. So in the current environment, that's probably not a bad thing either.
And you're clearly excited about the DME. Can you explain why that is?
Multiple levels of excitement. The first one is that we actually hear from the patients, which is, you open your doors, and when you're calling on a doctor, you're kind of distant to how you're making a difference, but this is really in your face. You hear from patients, you hear from carers, but it is such a large business opportunity. Of 8.2 million patients, if we can hit an eighth of them, right, we're going to change the world, because people who use our products in wound care will just tell you it's a miracle in a tube.
And in terms of market penetration and sales, a question here, I won't name the person who sent the question in, but since the implementation of the DME arrangement, what sales have you seen? Have you seen the trickle flow to a river, or is that the plan?
So day one was definitely a creek. We're now at day 9, and we're not quite a river, but we're a tributary. So we're growing every day. It's a really interesting process because there's a sound that comes when the order comes in, such that I think I'm actually training Pavlovic responses across my organization to respond to the sound. But yeah, it's starting to move. And I mean, I picked up one just because I was at the desk when it came in, and this person sent a $5,000 order in, one patient, 5 wounds. He needed help.
And in terms of making a difference, clearly you are. What are your competitors, I suppose? How closely do they watch what you're doing? Clearly, when you're at the front and you're pushing the way through to get things happening, but and taking all the heat, if you like. Now that you've got to a point where there's both market and regulatory security there for you, how do they now view you, and what sort of conversations are they starting to have? Clearly not wanting to put you on the spot or breach any material information.
We obviously, people are worried about us. We know that because they've sent regulators after us. They've gone after us at times with lawyers over things. They go after people that come from their companies to us and tell them that they're breaching non-competes, which is not true because we don't compete with anybody. Yeah, people know that we have something that is going to change the world, because most of the academics know. And they're always the first point of call, even if they might not be big users, they have big opinions. So yeah, our competitors are there, but the product performance is what's going to drive the difference. We either stop infection turning up, or we can get rid of an infection for somebody who might have been dogged by this for years. And it's that difference that will keep people coming back.
And patent protection?
Yeah, wide patent protection. So currently 46 patents across the globe, really, both for basics, method of action, all the way to disease treatments, like nominating the disease we make the difference in.
A great story, clearly a hidden gem, one to watch. Urge, as I said, for all the companies presenting, put it on your register and your share or your watch list. And keep an eye on it. But Judith, thanks for your presentation. We look forward to following the story with interest.
Yes, David, thank you. And thank you to the network for having us.
Thank you very much. Now, I would like to welcome Keren Paterson. Apologies previously for that, Keren. Managing Director from Trigg Mining, ASX code TMG, which, as I said, is exploring for the essential potassium mineral fertiliser, sulphate of potash, or potassium sulphate, which provides necessary nutrients for agricultural production and human nutrition. Keren, thanks for your time, and over to you.
Oh, thank you for having us, David. On that very bright note we got earlier from Martin, I do want to talk about Trigg and what we're doing, but also around ESG credentials and the forward-facing conversation that we're hearing around mining and minerals. And I know we hear a lot about it, but what I really want to talk about is something that's important to all of us, no matter what's going on globally, and that is food. Our ability to eat food is essential for our existence. So imagine being a shareholder of a resources company that can contribute to the food source of hundreds of millions of people every single day for at least a generation. And imagine that resources company doing that without an open pit, an underground mine, a rock waste dump, or a tailings storage facility. That's what we're doing at Trigg. We are looking to develop a new world-class source of such a product that's vital for our global food security. That is sulphate of potash. Next slide. And the next one, we have a lot of disclaimers given the stage of this project at scoping level. But as we advance that will be reduced over time. But on this slide, I want everyone to have two key takeaways here. On the left, we've amassed some 45 years experience now in sulphate of potash. It's considered quite a new mineral in Australia. We haven't yet really achieved commercial production, although there has been a first sale in this sector. So it's quite new, and it's quite new to be looking for minerals in brine. But across that team, we've got experience all the way from exploration through to project financing, bank debt, commissioning, and even into that production. And on the right-hand side, the enterprise value. Now, I presented last week, our EV was about $3 million, which is really quite remarkable given what I'm talking about today. And it's now 5. So we're on the return. Next slide. The projects are in Western Australia, which is the tier 1 location for mining projects globally. Western Australia is ranked as the #1 jurisdiction. The projects are all quite close together actually as well, about 170 kilometres east of Laverton. And our #1 project, Lake Throstle, is a globally significant greenfields discovery made just last year. We've also completed a scoping study that indicates we'll have low operating costs with an initial mine life of 21 years and at a global top 10 production rate. And this is just the beginning of the Lake Throstle story. It also has excellent transport logistics. And in the federal government budget update just this week, they've confirmed the available funds to complete the sealing of the Great Central Road and all of the connecting roads to become the Outback Highway across Central Australia. So we anticipate we'll have a highway to our mine gate by the time we're in construction. Next slide. As I said, this is about global food security. We have some 8 billion people on the planet that we need to feed each and every day. And that is only going to increase. We're also seeing changing demographics. We're all wanting more and more nutritious, high-value foods. And we're increasingly urbanised. And we're building on a lot of that arable land and degrading the arable land that we need to produce our food. So the numbers are something like in the 1960s, we needed to feed 2 people per hectare. Now we need to feed 5 people per hectare, and that is only going to increase. We've also seen in the last 18 months an escalation in geopolitics that is showing it is having a massive disruption to the supply side of fertilisers. Next slide. So why sulphate of potash? Well, it is a really clean fertiliser that provides just macronutrients the plants need, potassium and sulphur. Without them, we're just not going to get the yields to feed the people that we need to feed. It's also vitally important for many crops that cannot tolerate any addition of chloride, such as fruit, vegetables, avocados, coffee beans, grapes, all the good stuff in our diets that we're all told to eat plenty of need sulfate of potash to grow. And importantly, as I said, we're needing to feed more and more people from less and less arable land. And the only way we can do that is with mineral fertilisers, which now account for some 50% of our food. So if you think about dinner tonight, half that food on your plate is from mineral fertiliser. The other half, the minerals have been mined from the soils. Next slide. As I mentioned, we have seen massive disruption in the supply side in the last 18 months. At point A on this graph, the first sanctions were declared directly against Belarusian potash supply, and Belarus contributes to about 20% of global potash supply. At point B, China responded and has continued to respond by restricting exports of agricultural inputs. And at point C, sorry, the C is a little bit smaller than the A and B on the graph, but that's when Russia invaded Ukraine. And Russia contributes as well to the global potash supply. So we are seeing massive disruption. And you can see the impact in this graph on the price. It has doubled and has been sustained since that occurred. And that's important because when we did the scoping study on our project in October last year, we had a pretty steady price assumption. We thought it was pretty fair at $550 a tonne, but it has now been sustained at over $1,000 a tonne since then. Next slide. So in summary, the impact that we've seen on the global supply disruption is unprecedented, and it is affecting some 50% of the global supply of both muriate and sulfate of potash. Also in China, it accounts for some 2/3 of the global sulfate of potash production. And they're restricting exports. So where is Australia going to get its sulfate of potash from? And frankly, the rest of the world, where are we going to get this essential mineral fertiliser that we need for our global food security? Next slide. So Lake Thrussell, as I mentioned before, it is an incredible discovery. It is large, it is high grade. We have already identified some 14.5 million tonnes of sulfate of potash drainable in the resource because we're talking about minerals dissolved in the brine. This is a hypersaline brine in ancient riverbed systems that have created these salt lakes. That scoping study is based on less than half of that resource, and it suggests a 245,000 tonne per annum production rate, which is global top 10. It also has a mine life, an initial mine life of 21 years. So this is just the starting point, what we're talking about here. With quite a low, when you look at that prevailing price of US over $1,000 a tonne, our estimated all-in sustaining cost of US $272 a tonne. We've got more to do here. We've got a lot more strike length to drill. We've got twice the strike length of what we've got in that resource under granted tenure. And you can see another project just to the south there. It's 35 kilometres to the south and in the same Paleo Valley system. And I'll talk about that in a minute. Next slide. So what does this look like as a project? As I said, there's no open pit. So this is not a cross-section of an open pit. This will all stay in situ. What we're looking at is the minerals dissolved in the very, very salty water. It's about 8 times saltier than seawater. And it starts from just below our feet on the lake bed. You can dig a hole and there's the water. It's really quite incredible. And it is very extensive. What we're seeing here is a very, very wide paleo valley, a glacial valley that's up to 6 kilometres wide and up to about 150 metres deep. To access the brine and pump that brine out sustainably is through trenches in that surface network and the bores in a network pumping from the basal aquifers. And there's a variety of aquifers that we'll be targeting. It's also using solar evaporation. The halite crystallisers are on lake ponds, so the salt stays in the system. Halite is our table salt. That needs to drop out of the brine first up before we then take it off the lake. And in the traditional process, we go into what is called kyanite type or potassium type mixed salt crystallizers off the lake in ponds, further evaporation before it goes into a purification process. But what this does, it produces a very low carbon source of a very natural mineral fertiliser, when the majority of the production globally is synthetic and it uses a lot of energy and has some environmental implications by using sulfuric acid in the process and producing hydrochloric acid as a waste product. So what we're looking here at Lakes Russell is a long life, natural source of sulphate of potash for our global food security. Next slide. So what are we doing at the moment? Well, keeping that momentum up, we listed just 3 years ago, made the discovery, did a scoping study, and now we're advancing our studies to make sure we build a really robust project. So we have a bulk evaporation trial underway, and this will produce our first sulphate of potash, which we can then present to potential offtake partners for analysis. We're also reviewing alternative pathways to improve that reliability. Is there a smarter way to do it than what has always been done before? So we've got a number of study streams underway to have a look at that and see if we can gain more control over the process. We're also looking at how we can fully optimise the brine. In our brine, we've got a lot more sulphate than we have potassium, some 32 million tonnes of sulphate ions. We also have a lot of magnesium, so exploring what that might mean on the revenue side of the project and making sure by doing this that we minimise waste and maximise recovery. We're doing some more drilling, resource definition work to advance the resource and increase the confidence in that resource. We've also been working at the environmental approvals, which started last year as well. Next slide. So the Trigg investment case, potash is essential for global food security. Sanctions and domestic policies have absolutely disrupted half the world's traditional potash supply. We need to find more secure supplies of potash, particularly sulphate of potash. Trigg has outstanding ESG credentials, being able to produce this using solar evaporation. It will be Australian made. It's a premium product coming from Australia, a natural product with low greenhouse gas emissions, and it is suitable for all agriculture. The project is located in a world-class mining jurisdiction in Western Australia, which is my backyard, and Lakes Russell is set to become a top 10 global low-cost producer and a multi-decade operation. Thank you.
Keren, thanks for a great presentation. Clearly a project that has world-scale significance. Quick question, in terms of the Australian market, how much do you think the Australian market, given it is a net importer, is desperately calling out for a project like this to solve its import issues in the Australian market? And does sovereignty play a role, given what's been happening geopolitically, that all of a sudden now a number of groups, even if there's a slight price discrepancy, are keen to make sure that that net import position is rectified?
Yes. When I speak with Australian farmers, there is great concern around supply chain and their inputs. And they have, even before any of those disruptions occurred, they were telling me that they are always concerned about how they get their hands on enough of the fertilisers that they need. And as you said, Australia is a net importer. We need I think it's up to about some 200,000 tonnes per annum of all of the potash. And we are importing that. So it would be absolutely fantastic to see Australia become more secure in our food source by having all of the fertilisers available domestically for our agricultural product.
And I won't talk to other projects, but how important is it to not rush the process and actually understand the extraction techniques and the best way to maximise the production opportunities?
Yeah, this is a new industry for Australia, so we are developing the IP as we go with that. And from my perspective as a mining engineer, I like to build things and do it right the first time. I don't like surprises, so I want to make sure that we go through all the really vigorous and rigorous analysis process of going through a scoping study, a pre-feasibility and a feasibility study, and make sure that we really are building the right project up front the first time. and being very efficient with shareholder capital, because it's all about making sure that we create value for all of our stakeholders, in particular our shareholders.
And in terms of infrastructure, obviously road plays a big role, but does port and port access play a role? And if so, do you have enough? Obviously, it's a little way down the track, but is there enough port opportunities for potential export?
Yes, we've done the initial studies as part of the scoping study, and I did fail to mention that there's a rail terminal at Leonora. It's about 300 kilometres west of the project, so it's bitumen through to Leonora, and then it can go in, if it's going to be containerised and bagged, into the port of Fremantle near Perth in Western Australia, or bulk can go out through Esperance as well.
Now, historically, a good question here. The SOP market historically has been pretty tight, and new competitors haven't been welcomed with open arms. And particularly on the Eastern European side, they've created price pressure to make it hard for new entrants. Do you think the geopolitical situation has changed to make it more likely that a project such as this will get up, even if there was competition that came from Eastern Europe or other sources?
I'm not sure about the Eastern Europe source. If it's being referenced, Mannheim production, that is the secondary synthetic process, which is predominantly done in Europe and in China. And as we've all been hearing in the headlines, the access to energy is really quite stark in Europe. So that is challenging the ability to produce the synthetic sulphate of potash. When we've been out on the road doing the road shows and talking internationally, we've had a lot of interest from international groups in regards to this project. So I don't see that being a barrier to entry.
Last question. The Australian investor market, or even the sort of the funding market, is focused primarily on lithium, cobalt, manganese, graphite, etc. And projects such as yours, and you've been on record saying it, have found it difficult to get large-scale investor support. How does that differ overseas? What are you seeing in the North American and the European markets in terms of potential funding support or investment support into a project such as this?
Well, I think in Australia, we've been very focused on the clean energy debate because we feel very secure in our food, and we haven't felt sufficiently disrupted. Yes, we did have Iceberg Gate earlier in the year, and that is probably coming forth again with the recent floods in the East Coast. But I think we just aren't taking into account the entire food supply chain for us to be able to produce that. Globally, they are feeling more pressure on that. And I think that's what the difference is between the Australian and the international investor market.
On that note, thank you, Keren, for a great presentation. Clearly a project with global significance and could play a key role in overcoming the import deficits or the production deficits which lead to the import pressures for companies looking to acquire products such as yours on a clear path with a clear plan. Keren, thanks for your time, and we look forward to following the story with interest.
Great. Thanks a lot, David. Appreciate it.
Now, last but by no means least, I'd like to welcome to the virtual stage Brett Wallace, Managing Director of Recharge Metals, ASX code REC. Recharge is an Australian copper developer and explorer focusing on its 100% owned projects in Western Australia, namely the Brandy Hill South, Tampia East and Bohemia projects. Brett, over to you.
Thank you. Thank you for having me. Thank you for having Recharge Metals on this webinar. Our pursuit isn't nearly as noble as our previous presenters in terms of wound care and global food supply, but we are a copper explorer. If we can go to the next slide, please. So Recharge only listed in October last year. We're copper explorers, we've said, and we think copper is important, not only for the battery metal sort of revolution that's taking place, but copper is important for so many varieties of not only battery metal, but renewable energy, but also for electronics and just general conductivity, I should say. We have three WA projects. Our Brandy Hill project is our primary focus, but also we have Tampia East and our Bohemia project in the Kimberleys. But as I've just alluded to, the focus is on our Brandy Hill South project. So we only listed in October. We haven't been idle. We hit the ground running, and we've completed over 6,000 metres of drilling that's included RC and diamond tails. We completed our first program of RC and diamond through January through to May, and that intercepted some significant copper, nickel and silver mineralisation. We also conducted some downhole TEM surveys, which intersected several high or identified several high order conductors. And we've actually just completed the drilling on those conductors, which I'll talk to in detail a little bit later. If we can go to the next slide, please. So just a quick overview of our cap structure, where we've got a very tight structure. We've only got 45 million shares on issue, very low market cap at the moment. We've still got cash, some good cash at bank. Our top 20 is taken up by about 46% of the shareholding, and our biggest backer there is the Pamplona Group. If we can go to the next slide, please. Just a quick overview of why we wanted to have a copper focus is that, again, it's not just the battery metals, it's also the renewable energy space, and that copper is used in a lot of different things. And the copper price is tipped to have a strong demand in the future and a strong price in the future as well. And that second graph just shows some of the demand for the copper over the next 10 to 15 years. If we can go to the next slide, please. So overview of our Brandy Hill South project. It's located in the midwest of Western Australia, 20 kilometres south of the Deflector project, which is Silver Lake holds. We have 6 exploration licenses and one prospecting licence, which is quite a decent footprint. The area is well serviced by infrastructure and road and rail also, and close by towns of Morawa and Yalgoo. If we can go to the next slide, please. So just to cover the downhole TEM survey, which we completed at the end of in both February and May, they identified 6 conductors and 2 very high order conductors of 2,400 Siemens and 7,000 Siemens. It's basically what that measurement indicates is the higher the reading is, the higher likelihood that you will have massive sulfide. On the back of that study, we've just recently gone out and completed another RC diamond program to test all those conductors. What we found is that with after the town hall TEM survey is that we identified that we're probably drilling in the right area, but it's basically just identified that there, which you don't know before you drill the conductors, but or test the conductors, but it did identify that we were drilling in the right area, but potentially it just identified a few better spots. One of the interesting things that came out of the identification was the significant conductor to the west of the Salt Creek Shear, which we had initially targeted our drilling just to the hanging wall side or the east of the Salt Creek Shear, thinking that would be the main mineralisation would be, but that conductor has opened up a new sort of area for us and given us a lot of width, as opposed to having more of a narrow, just along the shear focus for us. If we could go to the next slide, please. So the diamond drilling program, which was identified to test these conductors, we've just reported these recently in the last couple of weeks. So the first 2 holes that were drilled, identified, was drilled through the conductor from the last page, which was west of the shear through the red conductor. That was holes 27 and 28, and that was testing the highest order conductor that we had. Both of those holes intersected zones of massive and blebby and disseminated pyrites, and that included chalcopyrite and pyrrhotite, and also coincided with the positional location of the conductor, which was a great result for us. The following 2 holes, which we've recently just reported on, I think the beginning of this week, were holes 29 and 30. And again, that was testing the second highest order conductor we had. And again, both of those holes had the same intersection of massives and blebies and disseminated sulfides flowing through, and again with chalcopyrite and pyrrhotite. Again, coincided with the position of the high order conductors, which is again great. And the fifth hole, which is testing two of the conductors to the south off hole, close to hole diamond hole 18. The drilling has been completed, and we'll be hoping to get an announcement out on that. We're just finishing off the processing of the core and get an announcement out on that as well. So we're anticipating assay results for the 8 pre-collar holes very shortly, hopefully within the next week. And we're busily getting all the core cut and sampled into the lab. There's one hole that's already in the lab. Another hole is about to go into the lab over the weekend. And then the remaining holes will go in hopefully by the end of next week. The photo there that you can see, that just indicates some of the chalcopyrite in the hosted in the quartz veining from hole 29 that we just announced recently. So there is a high prevalence of chalcopyrite as we go through, especially in and around the conductor, which gives us great confidence that we will actually have some we'll get some higher grade assay results with than previously. If we could go to the next slide, please. So this slide is just really a summary of our earlier RC program that we completed in January, and the diamond drilling that was completed in May. And you can see through that there is some significant results there, and some high grade as well. If you flick through with 32 meters at 0.49%. So a lot of it, there seems to be, what we have a shallower supergene structure with the copper, and then as we hit the fresh rock, then we have these larger intersections as we go through deeper in the hole. We had a large weather event that occurred at the end of March, which was right in the middle of our diamond program, which meant that we had almost a month delay in between our first and second hole. We were halfway down the second hole when the weather event hit, which was basically a 1 in 20 year event, and flooded through all the Salt Lake system there and prevented us from getting to the drill rig, which was frustrating and disappointing. But we finally got back out there to finish the program. But very excited with the results that we got from the diamond, also the RC. The most significant results for the diamond were 93 meter intersection at 0.35 copper. And then in hole 18, again, we had more copper results, but also we identified, especially on holes 18 and 19, that there was significant nickel mineralization through the pre-collar from about 50 meters all the way through to about 170 meters. So that was great. And then on top of that, we also had silver identified along which correlated through the fresh rock with the copper mineralization. So if I go to the next slide, please. So just a quick overview of the board. I didn't really explore this too much to start with, but it consists of Simon Andrew, myself, and Felicity Rappacioli-Muir. We think we've got a fairly good blend of corporate and commercial and technical capability to take the company forward, and they're also great to work with. If I go to the next slide. So why recharge? Well, we have a copper focus. Copper's going to be a critical metal going forward in the future. We haven't sat on our hands, as we've said previously. We're an active explorer. We've already, through our initial drilling program, identified some significant results, as we've got there, the 93 meter intersection of copper, 57 meters of nickel, 42 meters of nickel, and 234 meters of silver. We've then gone out and had the downhole TEM survey, which has identified these high order conductors, which we've just drilled, and we've identified significant zones of massive and blebby and disseminated sulfides that coincide with the location and position of those high order conductors. And now we're just waiting for assay results. So that will really dictate where we go from here, but we're really looking forward to getting those assay results. So
well done, Brett. A great presentation. Clearly, you're looking forward to the assay results, and I would assume as are your shareholders with bated breath. Some outstanding results coming through. Were they in line with what you were thinking, or have they blown your socks off a little bit as well?
I guess no, they're in line. I think the nickel and the silver were a little bit of a surprise. We weren't seeing a lot of the nickel further off the shear. The nickel seems to be localized along the shear. So some of the pre-collars that we've actually drilled and identified, and some of these other diamond holes that we've drilled with, 3 of the holes are very close to the shear with the recent program. 2 are way off. They're 300 meters away from the shear, in which I targeted that first conductor. So yeah, it's the copper we thought would be around there. I guess, like everyone, we're hoping for a higher grade than what you actually get, but 0.35 is still is a solid grade, especially if we've got the tonnage. But I think we haven't actually hit the sweet spot yet of where we're drilling at the moment. Hopefully that will come from the assay results we get from targeting these conductors, and then from here it'll be targeting and vectoring and identifying where to go next to do the drilling. But I think we are in the right area. We just need to do a bit more interpretation and a bit more vectoring to target where we go to next from here. But yeah, very excited at this stage.
Talking about the neighbourhood, how crowded is it? You mentioned Silver Lake to your northeast, I believe. How crowded is the neighbourhood? There's not a lot of empty ground in Western Australia, and things are getting snapped up and people are very active. Do you have a crowded neighbourhood, and how closely are they watching what you're doing, do you think?
I've got a lot of people watching this. Silver Lake we've talked to the exploration manager at Silver Lake, but they've got an active program happening at the moment to the north of us. But for whatever reason, there's a shift in the ground with the mineralisation where we're not seeing any gold at all, and Silver Lake's deflector is predominantly a gold mine with copper credits. So the ground's quite well held. There's a little bit of vacant ground, but a lot of it's covering Salt Lake and or reserves, which you can't really do anything on in conservation ground and timber reserves. So, but in the area, we've got Golden Grove, which is a copper. We've got there's an historic tungsten mine to the south of us. There's a lot going on in the neighbourhood that would indicate that we're in the right spot to get a resource, hopefully down the track.
And people keeping an eye on you?
People keeping an eye on us. That's fine. Quite happy to chat with them.
And in terms of the path forward, what does the next 6 to 8 months look for? What should the signposts or the key milestones that investors or potential investors be looking forward for as measurements of success and the path forward?
So it's really getting these assay results in and really crunching the data. We've done a lot of work on, obviously, with the logging of the diamond and probably logged more structures than I generally would. I've just got back on Tuesday from the drilling. It was a week, been up there pretty much on and off for the last month while that drilling's happened, doing the logging. So really it's crunching all the data and then reviewing what we've done. And we've also, through this time, had thin sectional petrology samples done, and we've got them back, which has been great in confirming and identifying the lithologies, which is really important. And we've also had some micro-XRF data, again, which has been aimed really to identify geochemistry and mineralogy of the rock units.
And sorry, for those who don't know, why is it important to understand the lithology of the rocks and the mineralization and some of those techniques you've just touched on?
Yeah, so when you go through and you log your hole, basically the lithology is just a different type of rocks as you go through your drill hole, and as you go through there, you have different sort of intrusive elements of rocks, and then you've got effectively the host rock. So you start out with your overlying alluvials, and then you go through a transition rock, and then what we've got now is either a mix of mafic and ultramafic and some intermediary rocks and porphyry intrusions going through as well. And what you're looking for is, okay, where is your main mineralization held within each units? So is the copper more prevalent within the mafic unit, or is it more prevalent in the ultramafic unit? And so that's why it's really important to understand your lithology and then also where your structures are and what's hosting the rock and what's hosting the best part of the rock, because then you can start mapping and doing some interpretation through as you go. So it's really important. So going back to your previous question, what's next is yes, identifying where to be drilling next, get these results in. Hopefully we have some great intersections and great grade, and that will then lead us to targeting and vectoring into where we do an expanded drill program, and that will be our next 6 to 8 months of work.
A quality team, a great land package in a well-known, underexplored but very interesting parcel of land there in Western Australia, in the exact right neighbourhood, as you said, with the funding required and the plans ahead, vectoring in on further drill programs, which clearly drive investor interest as those results come out. Brett, thanks for your time, and we look forward to following the Recharge story as it develops over the next 6 to 12 months.
Pleasure. Thanks for having me.
Well, thanks, everyone. That does bring to a close our Small Caps Hidden Gems webinar for this week. 3 great presenters, a fantastic keynote, 3 stocks to keep an eye on. Keep them on your watch list. Make sure you follow their progress. They're clearly companies to watch. Thank you to Martin Crabb from Shaw and Partners for a fantastic keynote presentation, and for you for participating, asking questions and getting involved. Have a great weekend, and we look forward to catching up with you next week.